Alright guys, welcome back. Wanted to put out another video this week. Last week was very popular, the video. You guys seem to find the analysis very, you got a lot of value from the analysis, and you can see that most of the stuff that we predicted last week is playing out into the markets this week if you've been following. Wanted to give you another video. There's some summarised footage from inside the London live room today, so it's fresh analysis. And also at the end of the video I'm going to give you quite a few things that you can keep an eye on that are either at market now, depending on when you watch this video, or opportunities that are played out from earlier and or something to pay attention to later on today or into tomorrow's London Open. So if you did want to come into the room, go over to www.tradingpower.co.uk, click on the London Live Room, and you can join us at 8 o'clock tomorrow morning. We'll be looking through and continuing on through this analysis and analysing the charts exactly the same way we do every day. It really gives you the benefit of that consistency. We always say when you was a kid, you was watching films over and over again, and you knew the words to the films off by heart. You didn't actively, deliberately try to learn the words. It's just because you watched it so many times, it becomes second nature. And really, that's what the room's about. It allows you to really propel your trading forward. For those of you who are struggling, or those of you who are lost in that vast information overload on the internet. And that's really what we're trying to do, trying to deter you away from all those shiny objects. So sit back, grab a pen and paper and take some notes as well. Writing it down we always find very powerful, particularly if you write down the notes on the analysis then read that back. That's when you're going to get maximum value. So sit back, enjoy the analysis, and I'll see you in the live room. Pushing up, we predicted a move up to this level, previous structure resistance. Now we're hitting this previous resistance level. I'm predicting that we're going to see some kind of reaction, some relief, and a pullback. There's potentially a counter trend trading opportunity at this level. If you look left, you look at all these wicks, right? Bullish rejection. The bears rejecting the bulls at this level. 99.50 even handle. If that happened in the past, it's likely to happen again. So as we go down to the lower time frame, this is a decent counter trend trading opportunity. You see the RSI is hugely overbought there, or has gone overbought. And if we went back to the daily quickly, sorry, we're overbought on the daily as well. Okay, so you can see we're overbought on the daily. We drop down, we've gone overbought on the 4 hour. There's no advanced pattern formation in this area, so there's no aggressive entry for me. So for counter trend traders, you might be looking for a retest of structure. Now if we can get a little double top here on the 4 hour, and a nice little retest here, and we get some bearish divergence on the RSI, that'll give you, you counter trend traders might be looking to jump on that move. Next bar market targets. I would always base my targets off structure. The first level that I would look at is this previous structure support and resistance level. You can see looking left, support, 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 resistance, resistance. We came up, broke through that. That'd be an area that I'd look for. I wouldn't like shooting past that area, so I'd lock my targets just above that 9800 even handle for target ones. ATR based stop above the double top. If we put in a double top, obviously we don't know that's what's going to happen. And that's how I play that, and that'll give you a good risk reward, because your stop loss is going to be, let's just bring on an ATR.
your stop loss is going to be something like this, with a reward of something like this. On the lower time frame, if you are just continuing to look to get long, because we are bullish, right? After all, break out, yeah, break out. Okay, so we've got breakout, wedge, breakout, wedge, breakout, wedge, right? They're everywhere. Now, because of where we are on the higher time frames, I'm predicting that there is going to be some relief here. However, we are still bullish, okay? Right? If we can get a pullback down into this previous structure level, looking left, this is going to be our initial kill zone. Okay? This is going to be our initial kill zone. And if we bring on our fib retracement, you're going to see we've got a 382 lining up with previous structure support. So obviously this is going to be the best area to get involved because this is previous support. But the first area I look for is previous resistance. So as we've come up, I'd be looking at this level here. Now the problem is with this level, if I'm only shooting for a retest of the highs, I'm not going to get my risk reward by having my stops below the low. You can see that's going to be inverse risk reward. I would want price action to push down into this zone, making my risk look like this. Let's just bring this on. Let's get this correct. 15 pip ATR. So what are we? 40, say 45. So 30. Just under that 30 level. Good risk reward. And in this area, what am I looking for? In this zone here, what would I be looking for in this zone? Yeah, I'll be looking for RSI to go oversold. You know, we're pushing down there. RSI to go oversold, and then a higher high, higher close candle entry. Okay, so we're at previous structure resistance. We didn't quite test the high in the first place that we were looking at. This initial resistance, this previous resistance level up at 76.60s. We've come close, but we haven't tested this previous resistance level, and we are bullish, and I'm predicting a move up to test this level. How do we get there? Well, we either go straight up or we get a pullback. In this space here, we just so happen to have a bat formation down at 76.08. I entered at 76.04 because I front run my orders by 4 pips on the 240 charts. I'm in this trade now. Wasn't doing so well yesterday, but it looks like it's turned around slightly. I've had to adjust targets because we've pushed up past the X leg. This pattern's actually invalid now. Still, if we can hit targets on this, I'm still looking at around 80 pips to target 1. So that's what I'm looking at. But now, what does this higher close say to us? Bullish, trend continuation, yes. We're predicting a move up to this high, so therefore we're at least expecting a test of this high. Right, so where can we get involved? Well, first level I look at is previous structure resistance. Stops 30 pips below this low. That's going to put me at 74.10. 74.90, sorry. If I'm entering at market around this level and I'm shooting for a retest of the high, that's just not going to cut it, is it? It's not going to give me the risk reward I like. It's a lot of risk on the table for an inverse risk reward. Do I want to just get involved just because I can tell my mates I'm in a trade? No. Do I want to get involved just because my wife might come in and see me just playing guitar or something and think that I'm not working, so I better be in a trade just to prove that I'm a trader? No, I don't want to get involved in a trade just because, just for being in a trade. I want to wait for the money to be on the floor begging to be picked up. In order to do that, I need to wait. I need to wait for price action to at least give me a 1-to-1. I need RSI to go oversold. And I need a higher high, higher close candle entry. That's what I'm looking at on this. Let's drop down to the 60. Again, same thing. We're at previous structure resistance. This isn't going to offer me a 1-to-1, so therefore I have to wait for at least a push down into this area here. And this will be my kill zone. So I just mark this pink. Bang, kill zone. And I just do this over and over and over again. So something to pay attention to for later on today. Pound dollar then. Let's go out to pound dollar on the daily. Pushed up. Previous structure support. Held that level. We're now at previous structure support. We're bearish. We're bearish. New structure low. Pulled up. Look to get short. Where can we get involved? First area I look at is previous support. And we've pushed up to previous support. To the previous resistance. The outside return is still an outside return. It's still valid until we violate this high. Okay, so essentially this is the kill zone, this broad kill zone, which is about 200, 300 pips of movement. So I don't want to just get involved anywhere, but we can look to refine that down. We can look to narrow down that kill zone at this area. I've got a feeling that we're gonna see a reversal, but that's just a feeling. So I have to continue and maintain consistency in my approach that we are bearish. I'm going to predict a retest of these lows. Okay, but this is a decent area. This is a decent area for a trend continuation move. The problem I've got is stop loss. There's a potential pattern setting up on pound yen. This is a Gartley formation. You want to check your risk reward on this one. And you want to check your risk reward purely because it's not a deep Gartley formation. It's just tipped that 618, which means that if your entries are at the 137.96 and your stop loss is at 137.49, well, if you bring on your initial targets, still get a 1-to-1. And then target 2s up at the 618 as well. And if we hit target 1s, obviously I can roll my stops to break even, putting us in a risk-free trade up to target 2s. So I'm going to get my orders on this. I enter at the actual conventional entry limit, entry order, and sell stop.
Order pending.
Good. So we've got a couple of orders in now for this. Now, if you're building out your confirmation in this zone, if we was to bring on a fib retracement from the most recent outside, or from this outside return here, I should say, you can see we've got a 382 at market there. Okay, we're at that level. You're going to see that if we go swing high to swing low, we've got a 618 retracement lining up there as well. So we've got some fib confluence at that area, right? Fib confluence, we've got a 618, a 382, we've got this previous structure wedge level here. Should be a decent level for protection. So this is a good area. I just can't get an entry reason, guys. So we'll drop down to the 15. If you're looking at the 15 or you're maybe looking at this as a CTS style trade, you might be building up that CTS score. I think yesterday we had a harmonic move at this level here. We've got that 618 at 382. We've actually come in. We went overbought on the RSI. We got bearish divergence. We put in this little double top here. Anyone who would have entered this double top would have entered next bar market here, looking to ride this down. Now, if you had stops in place, 40 pips above the high, you may be in this. You may not still be in this trade. You may have been just stopped out there before price actions come back down. Targets for me would have been around this level here. Okay, and we're in pound yen now. Okay, so I'm going to just adjust my target slightly on this. Get my orders, my profit target orders on. Pound yen on the daily, up at previous resistance again. All of these are pretty similar. We're up at previous resistance. We've put in a lower low, lower close. Then followed by a lower low, lower close. And we're pushed up to this outside return, which is valid as long as we don't break and close above this high, which we haven't. We held, wrong candle. We held, okay? Predicting a move to retest these lows. So this is slightly different to the Euro Yen, where we've seen a violation of that double bottom. So New Zealand dollar consolidating on the daily. We came up, we tested the high we was looking at, previous structure resistance. Support. We came up, we held, resistance. What we was looking at is we had this new structure high. We were bullish, and we're still bullish. And we came down, we held the outside return, not violating, and we predicted a retest of these highs. I managed to get involved and catch this move here from 70.90 up to 7200. So that was quite nice, but we are bullish and we were predicting a retest of this high. Now you can see we've hit that high and we've consolidated. So if you look out here, we had a bullish day, a bearish day, a bullish day, and now we're still in this zone. We're just moving sideways. What that means is we've done this. Up, down, right? So what do you think we can see in this area? Potentially patterns, right? As we consolidate. And as you can see, there's a couple here. Shah, are you still in this? So we're consolidating, but as we drop down to the 4 hour, you're going to see some patterns here. But for now, what I'm looking at is this higher high, higher close, right? Let's zoom in on this so you get a clear understanding of what I'm looking at here. We've got the most recent high at 72.96. We then come up and this candle held that level. This candle held that level. We had a small retracement into previous resistance, become support, and then we rallied and we put in a higher high, higher close, right? Higher high, higher close. What does that say to us? I'm looking out on the dailies. I'm looking at the next level of structure. There's some support in here, and there is some resistance up at 7,500. It's saying trend continuation. Yes, trend continuation. Therefore, I'm predicting at least a retest of this high. Got it? I'm not a trend following trader, so I'm not going to just say, right, higher high, higher close, so I'm just going to shoot for this move. That's not my style of trading. What I do want to do is assume that we're going to retest this high. So I want to jump on this move and manage to get, around 100 odd pips out of this move. Now, how can I get involved? Well, the first place I look for is structure support or resistance. Now, the resistance level's up here. So as soon as we put in this higher high, higher close, as we pull back, I'm not going to get involved here because my stops need to go below this low. However, as we start to push down, and you'll see this clearer on the 60, as we start to push down, this is the most recent outside return because we've got our new structure high, right? So we've got an outside return here, which means my stops need to go below this low, so I can almost work this backwards. So RSI, I just need RSI to go oversold now. Yes, it does. Goes oversold down here at 18. Right, tick. Now I just need a higher high, higher close candle entry. Right, we got one. We got one. Can I enter here? No. Right. So what if the What if the higher high, higher close candle entry was here? It all depends on whether I'm going to get that one-to-one move. What I'd like to have seen is price action push a little bit lower and then get a higher high, high close candle entry around this area here. That didn't happen. We may get another chance. We may see price action push down, and we may put in a harmonic move down at previous structure support, which will be a very good area to get involved. Pound yen, price action pushing down. Hopefully we can hit target 2s on this. May get stopped out for break even, but we've locked in targets. We've got 30 pips in the green today. Alright guys, so just to recap from earlier in the London live room, we've now on the Aussie CAD, we've now pushed down into this level of previous resistance and support, this previous structure level. And now it's going to offer us a good, although we are at previous resistance on the higher time frame, we could potentially see some relief, as we've seen some relief here as expected, and this could, we could see even more, but you know, we are long, we're long, we're bullish, we have to maintain consistency in our approach. So now I can look for a very minimal risk trade. So if I'm looking at getting my stop loss below previous support, which 25 pip ATR, so 25 pips below the low, is going to put me down at 98.20. So it's going to put me down at 98.20. If we can get a higher close in this zone that we drew out earlier, it's going to offer me a nice risk reward, looking for targets at a retest of the highs. Okay, so it's going to offer a nice risk reward. Obviously, if we can pull down a bit deeper, obviously if we can pull down lower and get that higher close, then it's going to offer us a great risk reward. So we just have to see how this plays out. As long as we don't violate this low, and we can get a higher close anywhere in this zone here, I can enter this trade and look to get long. Still in this trade on Aussie dollar, looking, it's not really doing much. We're just consolidating, moving sideways. If market continues to push down, you guys who trade advanced pattern formations, bring on the Fibonacci retracement tool, you can see we've got a bat formation down at 75.38. I've still got my targets, I've adjusted my targets, and I've still got my target 1 down at 75.26 for that bigger formation on the 4-hour time frame. But that's something to pay attention to later today, or maybe going into tomorrow's London session. On the pound dollar, after today's analysis, we did get relief where we expected. So we came up, tested this wedge looking left. We've seen this retracement here that we drew out in the live room this morning that formed, and you had that ATR based stop loss. I think it was a couple of pips above this spike. You can see we had some news come out today, but you can see that we retraced down, and you may or may not have hit targets. We said targets, you know, a retest of this structure level looking left. We also had this resistance level here, I said that I wouldn't be comfortable taking targets past this area. And if you bring on a Fibonacci retracement tool, you can see 382 lines up perfectly with that 3150. We've got that psychological number as well. I said you might want to get your targets just above that level. So that was that. If you got involved with that, good luck. Well done. Euro dollar, we came in, we eventually filled this CYPHER formation here at 111.08. Okay, targets we've had to adjust slightly, but we're looking at target 1's down at 1092 for, I'm front running my orders there, and target 2 down at 1074. Had to adjust target slightly, still a valid pattern. An opportunity for you to enter at market now. By the time this video comes out, I'm not sure if you'll get that or not, but potential opportunity there. And we had a 2-target winner on the pound yen. Pound yen, we had our 5-minute bat pattern formation this morning on the Pound yen, we had our Gartley formation this morning in the live room. We took this in the room. You can see we pulled up, hit two target twos on this. So that was a nice profitable day trade. High ATR on this pair. Good for a nice profit for a day trade, particularly on the 5-minute charts. So well done if you got that as well. New Zealand dollar, you can see we got that higher close candle entry. We did the move that we predicted was filled, was reached. But we haven't, we are bullish, so if we can come down and test this kill zone again, and we could potentially put in this harmonic ABCD move as well, lining up with previous structure support, then I can take a shot at this using the same analysis, ATR below the low, higher close candle entry, or if you trade advanced patterns and you trade Gartley formations, this is a deep Gartley formation. So that means that if you're looking for that 127 extension, you're going to have a Gartley at X to A to B, B to C, and a CD completion right down at the X leg. So a very deep Gartley. You can get your stops very tight below the X point and look to take targets at a retest of the highs, which is what I'll be doing. So very profitable, something to pay attention to later today or into tomorrow's London session. And I hope to see you in the London live room tomorrow. I'll be there from 8 AM. Just go to www.tradingpowered.co.uk and I'll see you there.